Hey traders, Akil Stokes here, and welcome back to another episode of the Trading Blog. Today, I have a very special episode for you, as I'm going to walk you through a trade that I recently took on the dollar Canada. If you've been anywhere near me on social media, whether it's Twitter, Stock Twits, of course, in the Syndicate program, you know that I've been watching this trade or this pair for a while. And I finally had an opportunity to enter it yesterday, and I want to walk you through the trade that was, because it ended up being a very, very good trade. But of course, I'm not just showing you this to pat myself on the back and say, look guys, I'm awesome, I'm super trader. No. I wouldn't be giving you this if there wasn't a lesson involved. And this particular trade follows up on the trading blog lesson that we had yesterday. So if you have not watched episode 76 of the trading blog, make sure you go back and watch that episode first. That way you kind of have the full perspective, the full picture of why this particular pair was in focus. So go back and watch that. And well, before we get into our video, a couple other things just as well. I meant to tell this to you a few days ago, but I forgot. If you head over to, if you head down into the description box below on this video, there are two links I want you to check out. One is a link to a guest article, a guest blog post I just wrote for my buddy Steven Burns here. Steve Burns, you guys may know him on Twitter, writes a lot of great content and a lot of great books for newer traders. And this article is called How to Learn, 3 Tips to Help You Retain More Trading Knowledge. And I've been teaching for a while now. I've been teaching for this is my 5th year teaching. And I've learned a lot about how to teach and how to pass along knowledge the right way. I've also learned that the majority of the time that we think we're learning, we really are not learning. So you guys that are binge watching my YouTube videos, that it's great. Or for you guys that blow through the Ultimate Trader Transformation course content in a weekend, that's great. But you're not really retaining most of the information, and it ends up being pointless, a waste of time, and you end up actually being a harm to yourself. So check this article out. It's going to give you some tips on how to learn the right way and how to go about retaining more of what you take in, and you can cut down on that learning curve on your path to becoming a consistently profitable trader. Secondly is a blog post, or a podcast, I should say, with the Two Blokes Trading. This is the second time I've done an interview with these guys. I don't know how they got me back. They must have bribed me with some money or food, one of the two. But it's a pretty good podcast, an interview I did with them talking about system hopping and being adaptable in your trading and knowing when to make adjustments, how to make adjustments, and really a side of trading that most people don't talk about. Now they talk a little bit about the flash crash in the beginning, so you may have to skip forward, I think 5 or 10 minutes, but check it out. It's an interview. And of course, if you're on Twitter or Facebook, just shoot me a tweet back or a message and let me know what you thought about both of these. All right, now that we got that out the way, I was supposed to tell you about that days ago, but I just forgot. Here's a look at the dollar Canada trade. We're going to start off by showing you the footage from last night's Syndicate video. Last night, after I posted the trading blog, I came back, did a video for our Syndicate members, and really revisited the opportunity on dollar Canada. We did end up getting that break, and I started telling our members, hey, this is what's happening. Now, this is how you want to react to it. So I'm going to start off by showing you that. We then cut to some footage of just me doing some commentary throughout the trade, probably rambling on like I am now. And then we finish it up with the completion of the trade from today's live trading room session. So enjoy, and we'll get started in a few seconds as soon as you hit that like button and as soon as you hit that share button. We talked about this level and why I would not look to buy at all in this level. And it's going to end up looking like a genius here. But what I said to the traders this morning is if we get a break and close below this level, 131.65, I think we can see a big flush, meaning I think we can see a high momentum move, really definitely down to $1.31, probably even down to these levels of structure right here, about $1.30.50, right? 130.50s all the way down to 129.73. It's just because I think we're going to take out a lot of orders. I think the bulls are going to finally give up. They put in a little bit of a fight right here. And I think we're going to see selling pressure push this thing down. So With dollar Canada, same thing, looking for trend continuation opportunities. If you have a range bar chart, this is the perfect trade chart for this. We're going to be looking for some type of pullback, some type of relief in this high momentum move, and I will look to short any bit of relief we have. All right, traders, so I just got short the dollar Canada. This was the trade we talked about in tonight's video. You can see some of my notes still left on here, but we pulled back. Let me just show you this on the 60-minute chart here. We pulled back right into previous structure resistance. So meaning we had a pullback, we had an extension here, we had a brief retracement, and then we extended lower, creating a lower low, lower close. We then came back, and you can see price action went to test our previous structure highs right here, and we ended up holding at that level. Now, I did take an aggressive entry on this trade, really because I don't have much risk at all, and I did so down on the range bar chart. So you can see it's a little bit different of a feel. You're going to be able to see it a little bit better on the 8 range bar chart. I have another pair loaded up on that right now. But you can see the pullback into previous structure looking left. And I got short right at 134.95s, right around here. So short at 131.94s, excuse me. I've got stops right above our previous structure highs up here at 132.08s. So not a lot of risk on the table at all, especially with the amount of reward we're looking for. And again, we have a target one that can be down here at 31.50s. And then secondary targets, we're looking at a potential move all the way down to, I think this thing could go really low. But secondary targets, we're looking at a potential move down to where are we at here? All the way to about 130.70s. And when I have some more time tomorrow, I'll go ahead and throw some Fibonacci's on there and see if we have any Fibonacci influence. I'll really do a full analysis of this level. But right now, I'm just looking to get target ones hit. I have those set. And before I go to bed tonight, I'll have a clearer view of where those target twos need to go. But I did end up getting involved in the trade. Up about 10 pips right now, which is not much at all. But you can see price actually started rolling over in my direction. So we'll see how it turns out. All right, guys. Well, I'm back. It's about 9:45 at night. You can see we just smashed through target ones on this trade for about 45 pips or so. So a relatively pain-free move. In fact, this trade was actually never in the negative, which is a good thing. I'll take it. Doesn't happen often, but we ran right down. And what I just did was, obviously, I rolled stops beyond the break-even point so that, you know, there's no way I can give back any profit to the market here. But I started thinking about where I want to take extended targets at because, well, it's about my bedtime, right? I'm an early bird. I try to get to bed around 10 o'clock so I can wake up bright and early. And I want to have targets set just in case we make a run at this level overnight while I'm sleeping. You know, you London traders are always up to naughty and nasty things while the rest of us are in bed, and we often wake up to some pleasant or unpleasant surprises. But this was a tough level. Secondary targets was a tough level to determine because we don't really have a clear level of structure. The green and blue boxes that you see at the bottom of my screen, those are my dynamic support and resistance indicators. We call them the DSR levels. It's an indicator we use here at Trade Empowered to help give us a visual representation of support and resistance. And in this case, the blue boxes represent minor structure. Those are based off the 4-hour time frame. And the green box represents daily structure, so a structural level, structural zone based off of the daily time frame, which is what I use as the higher time frame. And typically these are good points to shoot for target taking at. However, in this area, we just have a lot of different levels. You can see in here we have lower levels and higher levels. We have all different levels where price action found some buying pressure. So it's a little bit difficult to really pinpoint a location. It's not like, say, this level right here where, boom, this is obviously the key swing point in the market. This whole zone is the swing point. So the question is, where is price action going to react into in that zone, or if we even reach it? But what I did was I drew some Fibonacci's on here. You'll see a Fibonacci extension right here, a 127 extension taken from our last swing high to swing low, swing high to swing low. I also took my Fibonacci extension tool, I inverted it. So I drew it backwards from my swing high to swing low of this pullback move. And that's a technique that we teach in our Ultimate Trader Transformation course. And although they're not right on top of each other, you see we have a nice little zone here. One's at 130.61, the other is at 130.59. So the level that I'll be looking at is going to be right in here about 130.61. Originally, I was looking at the 130.51 level, but you know what? In a trade like this, where I'm looking at a move, what did I get in? I got in at 132.40s, 131.94. So in a move like this, where I'm looking for potentially 130 pips of profit, there's no real point in shooting for 140 pips of profit and being a little bit greedy and going towards this psychological number in 130 when I can get out at a Fibonacci level at 130.61. Again, that's just being, hey, why be greedy for 10 extra pips? In this case, when you're looking to gain an extra 130 pips on the trade, it's not really worth it. So I'll be looking for a retest of this level to clear off the remainder of my position. And well, we'll see if we can turn this good trade already and profitable trade already into maybe a much bigger trade as well. But I'll keep you guys updated in the morning, no matter what happens. And again, you London traders out there, don't do anything tricky, all right? Trying to get some profit on this. Hey guys, welcome back. It is Wednesday morning now, about 6:20 a.m. Just about to start my initial round of top-down analysis for the day. And want to give you guys an update on this trade as promised. Let's go back down to the range bar chart here. And we had a pretty good London session, at least the first half of the London session. Price action didn't spike back up. In fact, we just created new lows here. And what that allows me to do is take my stop loss and roll it down a little bit more, locking in a little bit more profit here. And again, this was something that we talked about in Monday's private strategy lab, and I actually turned that into a lesson for one of my trading blogs earlier in the week as well. And if you guys aren't watching my trading blog, man, go over to my YouTube page, just YouTube search Akil Stokes and check it out. I guess you can also watch it under the Akil Stokes playlist here on the Trade Empowered YouTube page, but check it out, guys. We're giving it's not as technical as the videos I do here on the Trade Empowered website or Trade Empowered YouTube page, but giving a lot of tips and a lot of tips and insights on really obstacles that I was able to overcome in my trading, and hopefully allowing you to have an easier path, or at least know what you're getting into before you look to hurdle them as well. And reducing risk has been one of the topics of this week. How if you want to get better at trading, it doesn't necessarily come by finding more opportunities or taking a bigger position size or being more aggressive. Sometimes that stuff helps, but only to a certain extent. The real bonuses come from reducing risk, meaning losing less. Not only just losing less, I mean, not necessarily just losing less as far as many trades you take, but losing less on your losers as well. And that's one of the reasons I like to lock in profits here. So we'll continue to track this. Hopefully I'll give you guys another update before our live room opens up, but the trade is going in our way. There's still a long ways to go before we get down to that level. So I'm not jumping for joy or anything like that. But again, first targets were achieved, and that's the main goal. Now we're just essentially playing with house money. So for you guys that get into those psychological battles with yourself, at least at this point, this is where you kind of breathe freely and know that regardless of what happens here, you've made profit on the trade, unless you sabotage yourself. But I know you guys aren't going to do that. So, all right, back again. So we see the market had pushed down. We just cleared the 131 even level, another psychological number. So we're going to roll stops above there as well. If price is going to continue lower, we shouldn't see a break back above this level. Again, you can see we broke and closed below it. We came back up to it to retest it. That level of resistance now held, and we're starting to consolidate a little bit down here. What we should see is a little bit of coiling, and then typically coiling, right? Consolidation leads to expansion, and we should see one more break to the downside. So what I'm doing here is the same as I've been doing the entire time, continuing to lock in profits. We're now at Worst case scenario, target twos are going to hit about 82 pips in profit. But I do think, just based off of how price is moving, that we will get this break, and you're kind of seeing it start right now, that we should get this break to the downside and come down to this 3063 level. Now, it's important to notice here that this is another conversation point that we had on, what was it, on Monday in our private strategy lab. Actually, this is kind of the topic or the question that brought up the entire training lesson. But the question was about, hey, Akil, should I trail stops forever? Meaning that, we all have the big dreams of catching that very, very long trend that lasts forever and makes 1,000,001 pips. And in the reality of trading, that doesn't really happen too often. Most of the times, if you're trailing with no real point in mind, you're going to end up getting stopped out for less than what you would have had if you had a set target. So I've always been a believer of having a set target. My philosophy in the market isn't to catch the entire move. You've heard me say it before. I'm not trying to grab the entire cookie out of the cookie jar, because that's how you get caught by mom and then bent over and introduced to the belt. Rather, I'm just trying to reach in. I'm going to take some crumbs. I have a specific amount in which I want to get out of the trade, or a specific level in this case, I guess you can say. And if it hits that level and continues rolling on, hey, there's no need for me to be upset. I got what I wanted out of the trade, and I'd much rather do that than get burnt for trying to be greedy. So I'll see if I can sit here and watch this with you. It's about 7:30 a.m. now. It's my time for breakfast, right? Time to feed the body a little bit before we start our live room session. But I'll just come back and peek in if we do end up getting down there. But pretty cool trade. I'm glad I can walk you guys through it. We did not end up, I've been tracking this. I'll probably put this out as a video, so I've been recording this, guys. But did not get to my ultimate target area here at 130.63 with Canada. Got stopped out on trails for 82 pips. So, hey, 45 pips on target 1, 82 pips on target 2. I'll take that. Trades don't always work out your way, but it's always a positive when you can write in the notes section of your journal, did not achieve the target 2s I was shooting for, but got stopped out for 82 pips of trail stops. And this is, guys, transformation members. This has been the theme of the week. I know I've been talking about it a lot. You're probably sick of it. This has been the theme of a week. Yeah. There's pros and cons. This thing may come back down and rally and hit that target level. I'm okay with that. My number one goal is to reduce risk. Now, you want to reduce risk smart enough so you're not sabotaging yourself, right? We talked about trailing it too quickly on Monday. We don't want to do that. But my goal is to reduce risk. And it ended up being a nice trade. So, nice trade here. This follows up on the conversation we had yesterday in our live room about how I said, remember, guys, when I said if we break that level on Canada, I thought we'd dump off and fall off a cliff? Well, guess what we did on Canada? We fell off a cliff, right? I told you so. I told you so. Right? No, that comes from that's experience in the market. It's not me being a genius. It's not me being a super trader. It's me just having a firm understanding of how a price chart moves, what it means when you get certain type of candlestick formations at a certain level, and just experience in the market, right? Seeing it over and over again, right? The market only has we never know what the market's going to do, but the market puts in patterns. And I don't mean literally pattern formations, but it has a pattern to its movement, and that pattern repeats itself. In theory, the market only does three things, right? It trends up, it trends down, and it consolidates. It just does those three things in a different way. But if you can find those little clues that the market leaves you, right? And this was a very little clue that the market leaves you, it can open up the door for some big trades. And you don't need to find something like this every day, right? I think that's the mistake that many traders make. They look for this every single day. They look for this big move every single day. No, the day-to-day game in trading is all about survival. right? The day-to-day game in trading is all about survival. Where it's like, hey, 20 pip winner here. 15 pip loser there. Hey, 40 pip winner here. 30 pip loser there, right? It's back and forth, maybe slowly moving in that right direction. Maybe once in a while you put together a hot streak, but then you put together a little losing streak. And then every once in a while you find those big trades and you take advantage of them. You don't miss them. You don't miss those bigger. This was one of those moves that Jason Stapleton used to call, one of those moves where there's a bag of money sitting on the table right in front of you with a sign that says, "Take me, please. This is not a game. I'm not joking. Take me, free money." This is one of those trades. They don't come too often, but when they do come, take advantage of them because they're going to pay. They're going to pay for a handful of your losses. So I hope you guys enjoyed that again. The trade didn't end up hitting target twos, but it was still a solid trade in my books. And again, this is one of those opportunities where it happens quick. As you can see, we shot the video in the late evening, and then a few hours later, the trade was triggered, and especially in a time where the markets are pretty thin. So if you're not keeping up to date, if you're not keeping in tune with the pairs that you're trading, you may miss these opportunities. And that's one of the biggest benefits of our Syndicate program, guys, is having more eyes on the market. Not only do you have Jason Greystone, who's over in London, but you have myself as well, keeping eyes on the market and giving you a heads up about trading opportunities like this. Now, it's not a signal service, so you're not expected to just buy or sell whatever we do, but maybe some of these ideas meet something that's in your trading plan, and maybe we see something that you should be trading and you just miss. And having more eyes on the market, I can't put a bigger emphasis on how important that is, even for us as traders. And fortunately, again, with Jason Greystone being over in London, with me being over here, you basically have traders looking at the market around the clock. So check it out, guys. Just go to our website, tradeempowered.com, click the products and services tab here at the top. Click on that Syndicate box right down here and sign up for your 30-day trial. It's $1 for 30 days. And if you enjoy it, I recommend doing the 1-year membership. That way you save 50% on your membership fee. So I appreciate you guys joining me as always. I'm trying to get to 100,000 subscribers as well on my personal channel. So for you guys that are watching this over on the Trade Empowered FX channel, make sure you go over to the Akil Stokes channel and subscribe as well. Until next time, plan your trade, trade your plan. Take care, guys, and you guys have a great rest of your trading week. All right, traders, so I hope you enjoyed today's video, and if you did, please show us by hitting that like button and subscribing by clicking the button right below. If you're looking for more educational content, feel free to head over to our tradeempowered.com website, or also take a look and you'll see more videos available for you. Have a good one.